Amazon has been pulling back these last few weeks but had a nice move after Q3 earnings. But where can the stock head from here? Let's take a look at the fundamentals and technicals to find out. Amazon reported a strong Q3, beating on the top and bottom line and showing a level of profitability that hasn't been seen in quite some time. They are continuing to make investments in AI, announcing their AWS Generative AI Innovation Center, which is designed to help their customers launch new generative AI products, services, and processes. The biggest driver of the stock is AWS because of the high margins and how it is a key driver to profitability, especially during long investment cycles that Amazon constantly undergoes, whether they are building out fulfillment or AI products. AWS growth has been slowing to around 12% in the last 2 quarters due to cost optimization, something even Google cited because companies have been pulling back spend amid uncertain economic times. However, I feel these rates are stabilizing, and if that's the case, coupled with their strong profitability, I think the growth rates in the cloud business will begin to rebound. So just to show you how important AWS is, when the company spoke of cost optimization during their conference call, the stock took a hit, but quickly rebounded when they said they signed several large cloud deals that will be reflected in the upcoming quarter. Now, there is a looming threat from budget site Temu, though I feel they are more in competition with the dollar stores, and if the recent FTC lawsuit forces a breakup of Amazon, I think the stock would actually trade higher because the market always prefers pure plays. Amazon at its high was up about 80% off of the October low and has since corrected about 20% to the 200-day moving average before rebounding after Q3 earnings. Now, we did have a bit of an island reversal following the gap after Q2 earnings and the subsequent gap down after the September Fed meeting. We are still holding the bull trend that has been in place since October and trading above the 200-day moving average, though we are trading below the 200-week moving average, which is something to take note of. We did have a bit of a bullish RSI divergence where we made a new low in price, but not a new low in the RSI, showing there was less selling pressure on this most recent pullback. Now, I would assume that we do some back and fill down to this earnings gap and consolidate along the 200-day and the trend line. Some key levels to keep an eye on are the trend line and the 200-day at 120. We have some support at 110 and finally 100. If we look at the fib retracement, we did retrace almost 50% of this most recent move, though I would like to see a pullback to the golden zone, which is typically where I like to buy pullbacks. I'm currently holding Amazon shares and have been selling covered calls at resistance levels to bring in additional income during this down move in the stock.